Good morning, everyone. It's Chris from Solstice. I hope everybody's doing great. You can find us on Twitter, Instagram, Discord, as well as YouTube. Hit the like button if you like this video, subscribe, and give us your comments. We use this adaptive algorithm for trading, use only, high market, down market, side market, whatever way it goes. This is for illustration use only. We're not a broker-dealer. Our past performance doesn't give us any indication of future results. Let's go to the first slide that I have here. And I have the S&P 500 index. And I said we use this adaptive. I put a 3-year historical S&P showing the January 2022 low, the March, the May, the July, October, and a push to the annual high. Then in January 2nd of 2022, we had the high for the year. We fell back down in range to the 50% of the 2-year from the covered March 23 of 2020, and we rallied back up. The reason why I'm using this, I'm showing you the February lows, the March highs. Every time we tested the 50 simple moving average, which is in yellow, we rejected it. We tested it in December of 2022, couldn't make it back. And in January 3rd of 2023, we touched that low. We pushed higher. We made a new high. Then we had the Silicon Valley Bank issue and they bailed them out. We had the push down in March, low. Then we rallied up. We are in April. We're coming out of a downtrend channel. If we consider this a shoulder, a head, and a double shoulder or a W shape, do we continue and clear the 116 simple moving average? This is an orange. To continue higher, we are in an uptrend. You can see this down channel here, and I have this uptrend here. We came out of a wedge, we fell down and rallied back up. In order to run, we have to clear the 41.95 and this gap here in order to get to the August prior high, and we are holding the 50 SMA. We're going to trade what we see, not what we think, and we evolve as traders. Whether we day trade, whether a broker, we learn and we adapt to the market environment, and that's the most important thing that you need to learn in trading. Let's go to the next slide. Here I have the S&P, Nasdaq, as well as the Dow Jones Industrial Average, showing the S&P 500, Fortune 500 companies, the Nasdaq 100, as well as the Dow. We have been range-bound, trying to break out. In the prior weeks before the Easter holiday, this was the range. You can see the holiday here. And the prior week here, we were range bound. We pushed. Then we came back this week on Monday, Tuesday, Wednesday, Thursday, Friday. And we're trying to come out of this 51,400. As long as we can stay above 51,400 in order to continue higher, we get a breakout. If we fall back in range, pay attention to these levels in this consolidation. We have a lot of volume here in order to keep us going up, or does the trend change? Let's go to the next slide. What I have here is the E-mini S&P 500. The volume profile is the shaded gray area in beige. The value area high and low are in shadows. And the time spent are in numbers or alphabets. And the green is the time value. The POC is where most contracts are bought and sold in the S&P 500. Where it's been touched before, if you see this was an overlap, inside day break up and break down, the POC and the time spent was basically broken out. We had the prior day, which is Thursday, the POC high here, and the time spent is low. The time spent, this is a virgin control point, but on Friday we have a POC here and a time spent here. Do we open above, below, or inside day? This is going to be determined by the overall European as well as the Asian markets in Australia. And we will pay attention to the slides on daily basis. Are we inside the range, above the range, or below the range? Or are we coming to from the low to the inside range? Are we going to get a breakout, or are we going to fall back in? Same thing, gap up. Do we come back in the range, in the value? Do we break up or break down? Or are we having an inside day in like the prior days? So let's go to the last slide. Here, I'd like you, to check the website, give us a jingle, hit the thumbs up, subscribe on YouTube. It's for free on YouTube as well. Let's go here. This is the first slide. I put the S&P 500, Nasdaq, and the Dow. And the reason why I use this, I put this oval years ago. If you go back in history 2 to 3 years, I put these ovals before this event, and I put this right here. I didn't activate it to show you that this high is actually unactivated. What I wanted to do is show you that this high that we had in January till the low is 100% move of this angle. If I duplicate this, this is half the move. If I duplicate this, this is half the move of the February low to the March 23rd covered. We had the consolidation here, the January low, the rally, and we came back down to retest the 50 in the February before the 19th gap and falling back down of covered. And we're trying to come out of this range. If I zoom in here for the 2-year historical, we can see we are creating like a shoulder, a head, a double shoulder, but I consider this like a W pattern. In case we clear this candle, I'm looking to fill this gap. In case I fall back in range and 50 does not give us support, I look for the range here in this consolidation. This has a lot of volume in this area. Do we stay range bound? And we got to pay attention to the Federal Reserve Board if interest rates are going to still increase for the next quarter, another quarter basis point and maybe another quarter. That's what Goldman Sachs and everybody's talking on the street. Or is it priced in the values of those instruments? Let's go take a look at BTC, and I want to do this on a weekly instead of 10-year. We're going to go 3-year. I'm going to do 5 years on them, so that way the charts look more cleaner. And I'm going to use the more longer time frame than the short. I'm going to go /BTC. GBTC is the ETF for Bitcoin. We can see after this rally, we had like a crab pattern or an M. We couldn't make that shoulder. We created like, think of this as a V shape, and this is the handle of it. Looks like a cup. We fell down. We are coming to fill this gap, and I want to pay attention to this gap if we fill it or not. This is the candle that's very important. I had these over. We're coming out of a wedge. We rallied up and we called the 17.3 to continue higher. There was another opportunity in 19.5, 20,000 to buy BTC and rally back up to this area. We are in this consolidation of those 3-4 weeks range. Do we get back up, or do we fall back in? We have to pay attention to the instruments technically, and I will show ETS just slightly to show you where the gap is on Ethereum. Let's go take a look at GC in gold, and I'm going to use the GLD instead of GC. GLD is the ETF for gold. We are coming out of, after the last 5 year, that big rally we created like a cup or a V shape. We fell back in the range to the consolidation where the breakout happened. We created another, if you consider this like a V, and this is the handle of it. Do we continue and get a third breakout above the 193, 194, or do we fall back in range to the backside of this channel? That's in gold. Let's take a look at the dollar. I'm doing it a little differently today just to give an overall view of the overall market. We can see after the 2020 March highs, we fell back down in 2021. We double bottomed, did a big rally spike up. We coming back in. Is this considered a shoulder, a head, and a shoulder to continue to the backside of this wedge and the 116 SMA to catch up with the 200, or do we reverse and go back up? Pay attention to the American dollar, Aussie dollar, European dollar. It can give you an idea where the currencies are, as well as the Japanese. Let's go now take a look at the NYA, New York Composite. The New York Composite, I can take these fibs up, but I did this just to show you where the annual low was, where the annual high is. We are coming out of this range. You can see this downtrend. We looked below. We tested 1/3 of this wedge or this downtrend channel to the back of it and bounced back up. In order for NYU, New York Composite, which consists of the New York 2,000 plus shares that are traded on the exchanges, do we continue higher in this back downside channel and the 50% of this? Do we end up clearing the 116 simple moving average, which is this orange here, and the 61.8 fib in order to break up, in order to continue higher? That's on NYA. Let's take a look at XLK, which is the tech sector. We can see in the tech sector, similar situation. This was the prior 2 years, consolidation before the February low in 2021. 1. This is a 2022 low. We are coming out of this range. If you can see, we came out of that downtrend. We are pushing up in order to clear, and the XLK, the tech sector, to move higher. Is it kind of creating a little shoulder here in order to break the 151 and break this candle up here? Or do we fall back in range to the backside of F3? Because if you take the resistance up here, support is here. F6 is 61, F5 is 50% Fibonacci, F3 38.2. There's a 23% right here, and there's a 78.6 right here. I don't have them marked on the computer. So let's go now. Take a look at J and K, the bond sector. Oops, J and K. We can see that J and K, there is consolidation. We are coming because I showed the dollar inverses to the relationship of the bond market. If interest rates going to climb up, that means the par value of those bonds will fall back a little bit. Before continuation, we have to see what the Federal Reserve Board are going to do in the next quarter and where we are standing in the global as well as the economy in the global markets. If I will use TBT to show the Bloomberg, this is the inverse relationship to the bonds, which shows you the interest rates coming back down, but they tried to spike up. This is range bound, which we are in consolidation of this area here, this area here. If we fall back in, the backside of this candle would be a great area. If we spike back up, that means interest rates are going to start nickeling back up. Let's take a look at XLRE. That's in the real estate. You can see that the real estate is still in a downslope after the rally up and the Silicon Valley Bank bailout. We can see there is a slowdown. If I could take a look at XLV, this is in the healthcare sector. I'm using a couple of ETFs just to run them through to show you that we are range bound, and I will use IWM last for small cap instead of the Russell, and I'll use the E-mini IWM. We can see that the Russell after prior year range bound looked above in November, fell in. This was the January high. We fell back down. We kind of been in this upper consolidation. If I zoom in here, we are consolidating in this area. In order for the Russell to run up, we have to clear this channel, the 50 SMA and the 18 simple moving average to get back to the 61.8. So far, we are range bound in the lower distribution of this range from the August, October, November, and this is December. And you can see the December low. This is the January. We looked below in March and tried to rally. Remember, people's emotions are in the small cap. They don't look at large cap growth companies. Sometimes they don't want to trade in them. They're looking for an opportunity in the small cap, and this is sometimes the wrong way to go about it. This is the canary in the coal mine. If it opens up the door, it's going to give us an opportunity to run back up. I'm going to go to micro ES. And the reason why I wanted to show the weekly, it doesn't have fibs on it. It has just simple stuff on it. What I want to do from the micro ES, go to the daily just to show you where we are. 1 year daily. We can see that this is the shoulder, this is the head. I consider this like a double shoulder or a W pattern. We can see that W or double V. If this is going to break, I know I have resistance and support, previous day high, previous day low, the midpoint of it, and these are the value area high, value area low, and the POC in the S&P 500, and these are the extensions from Thursday. If I push up to the 50%, or if I fall down to push below the 25 and the 50 lower from the midpoint or the previous day low. So the next day, which is this candle here, the previous day would be the low here, previous day high would be here. And I want to go to the 4 hour to show you how it looks like. We're going to go intraday. We're going to do this on a 20-day. We're going to use 4 hour chart to show you the ranges in relationship to the price action. We can see I don't highlight it. I took the highlights out of the overnight. Every week you can see where the Sunday market starts, where it finishes on Friday. And then the prior week we were consolidating. We broke up. The last 2 weeks from Easter and this week's trading, we are trying to get out of this distribution range between the low and high. We are in the 80% distribution to the upside. We looked above the prior week's high. If this is going to continue, we need this to break up, or do we get a downturn on Monday and a reversal on Tuesday up? This is going to be determined with what the market does for us. So if I consolidate this, you can see we are in an uptrend. If I do a linear regression uptrend channel and I get a line and I grab this candle from here, this is a low pivot in this one, or I grab it this way, you can see we are in an uptrend unless we lose this channel. We are trending to the upside. I hope this is helpful. If you have questions, please let us know. And you can see there's a lot of labels on my chart, which will give you where the highs are, where the lows are. This one has the Nasdaq 100, but what I'll do, I'll just give you a little blip of it, micro NQ, because we want to keep the video short and brief. You can see how the levels do give us the yesterday's close, the open, high, low, and in the profile, value high, value low, R1, R2, R3, and the pivots. Less bearish on a failed downturn because you can see the consolidation on the prior week. The Nasdaq looked up. This week, the Nasdaq was more range-bound compared to the prior week in the S&P, where the S&P trying to break up. So we have to keep an eye on the S&P, the Dow, the Russell in relationship to the overall market. Hope this was helpful. Take care, and I would love to see you on our Discord or in our chat room. Over.